Welcome back. Up now, we have Forum Daily's weekly energy update with Dan McTeague, president of Canadians for Affordable Energy. All yours, Dan.
Well, thank you very much for that, Julie. And as I mentioned last week, we would start to see prices at the pumps moving up, but not just that. The price of oil, uh, diesel, take your pick. All of these prices are starting to show what happens when the world doesn't produce enough energy. And of course, demand continues to rise. There's really only so much money managers, hedgers, and others can use to excuse the fact that the world is going to be seeing a pretty significant surge in demand, about 3% this year. And the crunch is going to happen in the second quarter of 2023. So that's coming up in May, June, July. We're going to see oil prices likely move up another $15 a barrel. They've moved up $15 a barrel just in the past couple of weeks. Most of that on the strength of OPEC and Saudi Arabia in particular, saying, if the United States wants to continue to use its strategic petroleum reserve and play this game of, interest rates and worry about the Fed and demand destruction, then we're simply not going to produce as much as we did. There's been a lot of tension between the International Energy Agency and, of course, OPEC. At the end of the day, I tend to agree with OPEC. Energy markets are dysfunctional, and they're now learning a quick and fast argument of what happens when, on the one hand, you try to be green and woke, shut down hydrocarbons and energy from being produced, and on the other hand, you expect others to produce it for you. I think OPEC's made it very clear to North America and Europe, you don't want our oil, we're not going to sell it to you. India, China, much of Asia, the Asian Pacific region tends to be the area where we're seeing growth, and that's why we're going to continue to see higher prices. So right across the country, we're looking at 191, 192 for Vancouver. Look for that to go up another 4 cents a liter in the next week. If we're looking at the rest of the BC Central, the interior, look for the prices to move up towards the $1.80 range. If it's, of course, Alberta, cheapest prices in the country, likely to remain in the $1.35 range, maybe up to 2 cents next week, with Saskatchewan and Manitoba having hit $1.60 and $1.67 respectively. Look for those prices to remain where they are. Ontario, you're in the $1.55 range as of Saturday. You're going to be back up to about $1.60 by next week. In fact, the other shoe is yet to fall or to drop, call it what you will. Julie, we're likely to see the introduction of summer blends of gasoline. That will push prices up, at least in Eastern Canada, by as much as 10 cents a liter. It's something Atlantic Canadians already saw, even though there was no pressure for it. If you look at Atlantic Canada, which we'll get to in a moment, they saw over the past 2 weeks a net increase of some 14, 15 cents a liter, and they're likely to see another 2 to 3 cents. So whether it's New Brunswick or Nova Scotia or Newfoundland or PEI, look for an average increase pushing you well into the 180 to 190 range, likely by the end of next week. For Quebec, always about 12 cents a liter more expensive than Ontario. It used to be 16, but Ontario's carbon tax, or that should say the federal government's carbon tax, applies to every province except Quebec. As we know, they get a pass because the federal government hasn't got the guts to take them on. And that's not a political statement. It's the reality. Nova Scotia has a cap and trade. They were forced to go and abandon their system and forced to have one imposed on them. On July 1st, all Atlantic provinces will see an extra 4 cents a liter added to the price of gasoline. So all in all, we're looking at a circumstance where energy prices are going to continue to rise. And as they continue to rise, we are going to test prices we haven't seen at least since last August. I don't think we're going to hit the height of $2.15 a liter, which is the average price in Canada in 2022. And if I can stop the dog from barking in the background, that'd be better. But the reality is she also agrees. Prices in this country are going to continue to rise, and they are going to have an inflationary effect. Whether we like it or not, the Bank of Canada and politicians in this country are going to have to recognize that as you meddle with the availability and supply of a country that has a lot of energy, you start to restrict that. There are consequences for consumers, not just in fuel, but most importantly in food. I saw a picture of the transport minister saying, hey, we're giving out rebates to everybody. In the background, trucks, diesel trucks. If you realize that 20 cents a liter and $1.50 to $1.75 for a liter of diesel across this country represents about 15%, you can see where the inflation is in fact coming from. It's time for the federal Liberals, their friends in the NDP and the Bloc and the Greens to get their head out of the stand and start putting affordability as the number one issue in this country. Because when you mess around with the price of energy, you start driving up the cost for just about everybody in this country. And no amount of government spending is going to be able to displace the harm that's inflicting. We'll talk next week, Julie. Thanks again.
Thanks for that, Dan. Again, that was Dan McTeague, president of Canadians for Affordable Energy. All right, stay with us. Up next, we have an interview about Russian misinformation in the media. Stay with us.